Hello friends, in this video we are going to discuss about depreciation and its problems. So let us first start with the meaning of depreciation. Depreciation refers to the decrease in the value of a fixed asset. It might be due to wear and tear, reflection of time, etc. Now let us discuss the causes of depreciation. Continuous usage of fixed assets will result in wear and tear. Over exhaustion of resources, mineral resources such as, will result in depletion. Accidents. In accidents, we might lose the complete fixed asset value. Obsolescence. Obsolescence means those are out of date, that those are not updated one. Afflection of time. When we use the asset, after some time, the value will gradually decreasing. That also might be a reason for the depreciation. Fluctuations. We can see in market there will be so many fluctuations. And methods of depreciation. I have written few methods here. There are so many methods, but I have mentioned few here. You can note down that. Now let us discuss in detail straight line method and diminishing balance method. Straight line method, also known as fixed installment method. In this method, the depreciation will be calculated, that will be fixed and same from year to year. That means it will not be changed. For 1 year, if it is 10,000, for the second year also, the depreciation amount will be 10,000 only. Diminishing balance method, also known as reducing balance method. So in this method, contrast to straight line method, the depreciation amount will differ in the subsequent year. That means in first year, if it is 10,000, in second year it might be 7,000 or 6,000, and in third year it will be 4,000. Likewise, it will decrease. So now let us discuss two problems on depreciation. When the rate of depreciation is not given. So here is the problem, that is, hope you have seen the problem. Sri Sai and Co. purchased a machine for rupees 2,50,000 on 1st April 2009. Estimated life of the machine is 10 years. The scrap value at the end of its life is rupees 50,000. Calculate the annual depreciation and rate of depreciation assuming that accounts are closed on 31st March every year. Show the machinery account for the first 3 years under fixed installment method. So from the problem, what we have understood that we need to calculate the annual depreciation and rate of depreciation. So for annual depreciation, there is a formula: cost of the asset plus installation charges minus residual value whole divided by estimated value of the asset. Here cost of the asset will be 2,50,000, that is purchased on 1st April 2009, minus residual value, that is scrap value, 50,000 whole divided by estimated value of the asset, that is nothing but estimated life of the asset or useful life of the asset, that is 10 years. So we'll get the value 20,000. 20,000 will be your annual depreciation amount. And here in problem, it is also mentioned that we need to calculate the rate of depreciation. So for rate of depreciation, the formula will be annual depreciation divided by cost of the asset into 100. Since we already calculated the annual depreciation, the amount we got is 20,000. 20,000 divided by cost of the asset, that is 2,50,000 into 100, will get 8%. Now we need to show the machinery account for 3 years. Now let us see that. First we need to put the format, that is table. Ledger will be prepared for this account, machine account. So debit and credit should be there. Name of the account should be machine account. Date, particulars, journal folio number, that is JF number, amount. Same for credit. So on 1st April 2009 we have purchased the machine. So whenever we are purchasing something, we'll mention to bank or to cash account. So here I'm using to bank account. So 2,50,000 will mention that amount. And then we need to calculate the depreciation for 1 year. Since we already calculate the annual depreciation, so we can directly mention 31st March 2010 by depreciation account 20,000 on credit side. When we balance both debit and credit, it will not get balance. So then we need to mention balance carried on amount, that is 2,30,000. And here importantly, dates are very, very important, whether it is from April to March or from Jan to December, like that. Mostly financial years will be used while calculating depreciation, but sometimes it might give you calendar year as well. So please make sure that you take care of those dates. And then for second year, we'll calculate the depreciation. Before calculating the depreciation, whatever balance carried on amount is there, that should be mentioned on debit side, 2,30,000, and then depreciation should be mentioned on credit side same. As it is fixed installment method, the depreciation amount will be same as we discussed earlier. Now then, balance both debit and credit. Now balance carried on will be 2,10,000, and the same procedure will be repeated for the third year. So as we have done that, so we'll get balance carried on amount 1,90,000. So this will be your answer for this problem. So now let us see next problem when rate of depreciation is given. So here is the problem. Ganesh bought a machine for rupees 17,000 and paid for its installation rupees 3,000 on 30th September 2017. Depreciation is provided at 20% under straight line method. Prepare machine account up to 31st March 2020. So here no need to calculate annual depreciation, like rate of depreciation should not be calculated because it is already mentioned here. So we need to put the format as earlier we have done. Now Ganesh has purchased a machine that is 17,000. He has also paid installation charges. So here cost of the asset will be 17,000 plus 3,000. Whenever we purchase a machine, if any installation charges or carriage, erection charges are there, those will be added to the cost of the asset. So on debit side, we should mention the date. Here the date is 30th September. It is not 1st April. So we should be keep in mind that the depreciation for first year will be calculated for 6 months, not for 12 months. So we have mentioned the amounts on debit side to bank account 17,000 and installation charges 3,000. Now coming to credit side, when we calculate the depreciation, here for 1 year the depreciation will be 4,000, then for 6 months, that is half year, it will be 2,000. So we have mentioned that amount, and then balance both debit and credit. After that we'll get the balance carried on amount, then that amount should be balance brought down, and then calculate depreciation for the second year, and then balance both debit and credit, and then balance carried on amount, and then for third year we should mention the balance brought down amount, calculate the depreciation for third year, and balance carried on amount. For this balance carried on amount 10,000 will be your answer, since it was mentioned that we need to prepare machinery account up to 31st March 2020. So we have prepared this account. Hope you guys understand. Please do share, like and subscribe. Thank you.